Hello, hello, hello. Really pray my people are having an amazing, blessed Monday morning. So here we are on a 1 minute chart, and I want to show you how you can easily, I won't say backtest, but the best way I believe one can backtest is what I'm going to show you now. That's how I personally do it. It's not something that's personally the best or anything of that sort, but it's just the process I follow. So in entering any given trading day, I'll have two things marked. I'll be on a 1 hour chart. So first I move from a weekly, apologies. So on a weekly, what am I expecting? I'm expecting all-time highs to get tagged entering into this week. That's the bias. So I'm already bullish on the narrative. Then you'll ask why I'm expecting all-time highs to get taken. You can't use anything all-time lows, a previous swing high, previous session high. Doesn't really matter. But the one thing you need is a drawn liquidity. And if your drawn liquidity is wrong, the chart will prove it to you and chase the other. If it's right, it will go in your direction. Because here we could have easily gone for this low, but we went for this high, and we'll kind of try and explain why I did that, or try to give you a conceptualized idea of how you can backtest the small price action. First things first, you mark the second swing high relative to the high that has been made or that was booked for the day. Beautiful, we have that right there. Swing lows, same thing, this. Then we keep moving up until we get to the opening there. What's this? Right there. It's a swing low. You mark that. What's this? It's a swing high. You mark that. So the reason I'm marking swing highs and swing lows is because the market moves from inefficiencies to liquidity and from liquidity to inefficiencies, or from liquidity to liquidity or inefficiency to inefficiency. It doesn't really matter how you conceptualize it. So here, below an old swing low, that's sell side. Below an old swing high, that's buy side. So as I was entering Monday's trading and I was looking at Friday and Sunday's trading, I'm noticing that the market is more willing to take out buy side than it is to take out sell side and sell side. Because when you're looking here, that's what it did. It hasn't taken out sell side yet. So it shows more willingness to go higher. Plus, I have an all-time high as my weekly drawn liquidity. So I already have that mark. Then I'll have same thing you're seeing here on the chart. I'll move on to 1 hour. Then 15-minute, that's where I'll jump into. So that's my bellwether chart. So within my 15-minute fractal, we have this high. We'll remove it as the price goes along, and notice the support here. Beautiful. Then notice breaks, comes back. Beautiful, breaks, comes back. That's nice. And here as well, notice the highs getting respected. Swing low, getting respected. But it's not the deep part. So for example, if I'm trading Monday, I'm expecting power of 3 to play out, meaning it opens engineers buy side, trades lower, and begins to rapid reprice higher. So let's say if we were here in terms of price action, I know you'd ask me, why doesn't it go to this double bottom here? Let me give you perspective, because if we're on a 5 minute, this is liquidity, right? So it has to, like for example, if we're in this range, takes out buy side, then sell side, and then we can expect it to go higher. That's kind of the conceptual ideas we'll be looking at. But when you're on a 15-minute chart, you need to understand ranges. So before this low was taken, I was here, right there. And actually, I was here the whole day, but it's just for the sake of context. So when I'm here, what do I have? I have one dealing range. I have the second dealing range, and you can also use this, but I'm using more bodies. Then this as well is a dealing range. So now if we have a dealing range and a dealing range and also a dealing range here, what do we expect before price starts spooling in either direction? When we have a not tight consolidation but a price action like this, we're kind of expecting it to reach equilibrium. So what we're going to do is we're going to grab a fib from here to there, not the wicks, the bodies. We mark 50%. Nice. We mark it right there. Then we take same dealing range from this swing low to that swing high. What do we get? Dealing range, 50%. So now we have confluence that the 50% might be with the price grab. It's not guaranteed, but it always has to trade to equilibrium for it to kind of expand higher in either direction, no problem. But that's not the deep part. What resides at that 50% This is the price action. Now this small pocket in price. So if I'm looking for bodies, if we're looking for price to trade below this swing low, it should trade into that OB. But the only time I'm going to dive into lower time frames is once we take out the swing low. What ends up happening? We take it out right there. So when we take out the swing low, what do I have? I have this marked, right? So within this dealing range, that is 50%. Within this dealing range, that is 50%. When we break through the swing low right there, I dive into a 5-minute chart. Then within that 5-minute chart, what do I need? If we trade below sell side, we need to trade into an inefficiency. So when you're looking at price action from this swing low, and all the way to the high end of this price leg, you'll notice that there's no inefficiencies here. They are here, but there's no inefficiencies that you can kind of look back into. They all have wicks. They've all been traded into, meaning they're all balanced. Now, what's the first unbalanced price range after sell side is taken? It is this baby right here. So what do? I have this inefficiency marked right there. So now whenever we trade below this, I'm looking for it to trade into this. But this is a 5-minute chart. So if it trades into this, or this high, I'm looking to go to 1 minute. What ends up happening is price consolidates, beautiful. What does it engineer? Double top after taking out buy side. So buy side needs to redistribute the orders from buy side to where? Sell side. And if it's to get hyperextended to the downside, where does it need to trade to? Into this inefficiency. I'm not looking for it to sweep these lows. Nor am I looking for it to sweep these lows, because this candlesticks, these 3 consecutive candlesticks, that's the 50% of this whole price run up and all this as well. So that's my bellwether. Anyway, so we see price opens up, trades lower, beautiful reaction there. Beautiful. That's nice expansion lower, beautiful retrace back into the order block, these 2 consecutive candlesticks, then rapid repricing lower into that inefficiency. Let's dive deeper into what happened here. I go on a 1 minute. So this is back testing. I go from higher time frames to lower time frames every single day. So what ends up happening, the day opens, consolidates, expands lower, almost said smart money reversal, second stage, low risk sell, rapid repricing, second stage distribution, or is it first stage distribution, and then expand lower into the inefficiency resting right below here. In all honesty, this was the small inefficiency I was looking at. Sorry, I wasn't looking at the inefficiency. I was looking at this down close candlestick right there. Bodies, not the wicks. When we trade into this, I'm looking to go long. Why? Because on a 5-minute, everything here is balanced. On a lower time frame, that's not balanced. That is not balanced. So I'm looking for you to rebalance into these levels for us to start spooling higher. Why would I expect it to spool higher? First things first. We have relative equal highs here. We have high here. And we have all these. What's resting above here? Buy stops, right? But let's say we're just here. What's resting above here? Buy stops, no problem. So it trades into that beautiful reaction right there. It seems too good to be true, I know. Then I was targeting these equal highs right there. Then we can have a look at the executions. Beautiful consolidation. Low risk sell. Oh, this is a lovely expansion. Consolidation into the low for this. That's what I'm looking at. So you'll have your level predetermined, or whatever it is on a 5-minute. You don't really care what happens here. But when it breaks this, then you dive onto 5-minute. Then once it trades into that 5-minute, then you drop to 1 minute to refine it even further, because you're trying to catch the swing low and the swing high. We caught it, beautiful. First partials was taken once these highs were taken. Then let's do this. Beautiful. Then now, this is where things get interesting. We create, you can remove this, and you can kind of remove that. We're consolidating by the same high, Friday's high. Beautiful. Touch once, twice, 3 times, 4. Then we got this beautiful displacement lower. But is this displacement lower random? No. What's resting here? It's an inefficiency. The same thing we were looking at here in terms of fractal, where it's up close candlesticks, down close, up close. I'm looking for the first consecutive down close candlesticks. What do we see here? As price begins to spool higher, that's the one prior to the swing low. So I mark that. Beautiful. So anytime price decides to retrace deeper, I'm looking for it to trade into this, that, and because it needs to, if it takes out the swing low, what does it need to do? To gravitate into an inefficiency. That's one there. So I'm looking to see how price reacts there, how price reacts here, how price ultimately reacts here, and obviously there, and not take out this low, because I believe that Quant Monday is low. No problem. We see price consolidate, consolidate, consolidate. Beautiful, beautiful price action. And when we get right here, beautiful. Oh my goodness me. What the hell? Beautiful. So we trade into this consecutive down close candlesticks back into Sunday's low. Trade into that. Beautiful reaction. Back in. And then we begin to see rapid repricing to buy side. If you just check this from this small fractal in price. Big premature entry, 100%. I was expecting just this inefficiency to hold and not really trade deep into that. Or if it trades, I just expect a tap and then rapid reprice higher, which we did get a small tap here. And I thought it was one side when we got this bit lackluster because it failed to, or it respected this inefficiency right there. Right there. Beautiful. Then we begin to see rapid repricing lower back into that inefficiency for higher prices. First target was just above here. Right there. Trade into that beautiful retracement. Nice. Then now every time it goes higher, all I'm looking for is to take partials because my draw is this the one? It's the all-time high. So what am I looking for? Once it trades that beautiful retracement, again, partials, 1, 2, 3, beautiful. Wanted to take partials here, but I was busy with a student, so I couldn't do that. And we traded into, not a student basically, it's just me sharing my analysis. I love talking about these things, so anyways. So I said I didn't want to beat myself up for not catching the swing high, so I just removed partials here again in case it does reverse on me and take me out. Then we got this beautiful expansion higher, taking out all those relative equal highs, specifically these ones. We blast through that, beautiful. Then we go higher, another partials, deep retracement. Didn't want to participate in long, beautiful. Once it took out this high, partials again, went higher, beautiful. And then nice, I missed the high by a few handles. Exit, missed it by one handle. Beautiful retrace because I'm anticipating a retracement, but let's go to the specific reasons why. If you take a Fibonacci from this manipulation leg, from this high to that low, and you mark standard deviations, that's what I was looking at. So we traded right into 2.5 standard deviation, but this was a manual exit, no problemo. Beautiful rapid repricing lower because of time. I was using time as a factor. 10:30, first 30 minutes of any candlestick, I'm looking for it to create the swing high, the swing low, relative to where it opened up. It doesn't really matter. That's a bit too deep, so I don't know how to explain that, but we'll get there when we have to. Then we got a beautiful retracement, beautiful run higher, taking out buy side. So what you're going to do is within this whole fractal in price, this is what I do personally. The reason I exit there is because of this. This is what I do when I'm on a trade. So every time, let's say I missed this and we got this expansion higher, what I'll do, I'll grab a fib from that high to that low. What's this? 50%. But what's resting below 50%? Is this order block, a small inefficiency there? What will I mark? There. And I'll look to go long. If it touches there, beautiful long opportunity. Stop below swing low. Target just above swing highs. Beautiful. Let's say you missed that. What's these here? consecutive down close candlesticks. Beautiful. What will I have? I'll have these marked. What do we see? Price trades into 50%, up to 50%, trades into, apologies, trades into 50% of this range. Beautiful, rapid repricing higher. The target could have been here. Then what you do is you mark how many minutes did it take from entry to target? How many handles did it offer you? Was it your model? No problemo. Trades deeper again, back into that same. You study that. Does this offer you 20, 30, 40 handles from execution? It does offer you 21 handles. I just want to see if I removed partials there. No, I didn't. That's what I wanted to, because I was studying that. But anyways, we get that. Beautiful. Let's say you missed that as well. What's resting below here? Sell side liquidity. Below sell side, what's resting? These consecutive down close candlesticks. We trade into that beautiful longing opportunity at 9:30 for higher prices. Then when we get this higher prices, from that high to the swing low, where do we trade? 50%. What's below 50%? We have this FEG, the small one right there, and these consecutive down, this one specifically. What I'll do is I'll mark that one. Notice how this aligns with the quarterly level for this. That's algorithmic price delivery. But anyways, so we get that beautiful 1, 2, 3, and we get it above highs. That is what that's the reason for my partial. So I'm taking partials as if I was in an execution. Long here, partial there. Beautiful. Now what are you watching? The next swing leg. So from this swing leg to that up there, let's do this. From this to that. What's this? Apologies, can you see? 50%. So from this swing leg to that, you're expecting it to retrace to 50%. What's resting at 50%? It's this order block. What is there any inefficiency below that? No, this is the only down close candlestick before this is my favorite model, where we have consecutive up close candlesticks after taking out sell side liquidity, trading into an FEG, but mostly sell side, and then buy side, and the only candlesticks consecutively we have are upside and only one down. That's my favorite candlestick. I love that. Very easy to spot. So I'm watching that. Beautiful. What happens? Price trades into that beautiful expansion higher to that high, and we get that delivered beautifully over there. And that's where I would have taken, if I was long here, this is exactly where I would take my partial. If I was long here, it's exactly where I would take my partial. If I was long here, that's exactly where I'll take my partials. So every place I take my partials, it's equivalent to if I was to take a single trade in and out of itself. From this to that, that's a single trade. I'll take partials there. From this to that, that's a single trade. Apologies. Bro, because I'm so focused here. From this to that, that's one trade in and of itself. So I'm breaking it down, or I'm breaking the trades down using exits as my means to show that I'm on side, basically. So anyways, we get that. Then this beautiful retracement, check that, that's nice, man. I missed the high by a few handles. But if you take the, apologies, if you take the dealing range, remove all these, if you take the dealing range from the high that was created, bodies not wicks, to the low that was created right there, what do we get here? 50%. So if I was looking to pyramid, or I didn't catch all these moves, this will be the one I'm in. And where will I take my partials? Right after taking on buy side. What do we see? Beautiful. Long, using these consecutive down close candlesticks. Let's do this. These right there. And we watch. Notice, beautiful. Colored outside the lines a bit, no problem. And then we got this rapid repricing higher. And from there on, just keep doing the same thing, and the same thing as price grinds and grinds and grinds higher to ultimately the top. And that's exactly what we get. I did miss the high by a few handles, a few ticks. And it's okay. I'm blessed, man. It was a beautiful execution, beautiful trading day. Amazing session. amazing session. Caught Monday's low all the way to Monday's high. Monday's low all the way to Monday's high within the session, of course. Within this, so if it opens up and we have electronic trading hours, I don't count that. Yeah, that's null and void. But this is a beautiful execution from Monday's low to Monday's high, pyramiding along the way, and that was perfect. I'm not gonna lie to you; it was very difficult holding this. Hence, I took partials. It was supposed to be a full pool trade, but I couldn't summon up the experience to do so, uh, and I understand why. I was way outside my comfort zone, and I was more than happy to push outside my comfort zone. It was everything was aligning for me. I was in a good place. I was happy. I was blessed. So I didn't see a reason why not to, because of my experience and how long I've done it. But so far I'm blessed. I hope you find this insightful. It's not going to be very long, but that's basically the gist of today's execution and how you could use this to take read the next current session. So what you can do is when today's trading closed and it's Tuesday, you'll have the same thing. Excuse me. Whatever high, whatever low, you mark that. That was created on Monday. You mark that. And you watch where is price relative to this range. Then when you want to go deeper, is instead of just using the previous day's range, you can use the previous 3 days. So you'll use Monday, you'll use Friday, and you'll use Thursday. When it's Tuesday, you'll use Monday, and you'll use Friday, and you use Thursday's trading. And you can, I don't count Sundays, but that's how you can kind of do it, my good people. But it's a beautiful execution, beautiful trading there. Amazing, honestly, amazing. One of my best days yet. It is actually my best day where I caught the low. It's my best day. It is not best day for obviously profits as well, but in terms of clarity, in terms of ability to understand where the market is going, when to take partials, when to hold for full pools, we just missed it by a few. Apologies. Am I marking the right time, please? 32, no, 42. Oh, there we go, 40, 26. So I just had three handles heat on this execution, catching the Monday low. And I'm best at exits. I'm not good at entering. I'm good at exits. That's my that's what I'm trying to shine at. And we missed the high by just a few ticks. Monday's high relative to the session. So other than that, this is a beautiful trading session. I will leave the comment section open for this video. So if you'd like any questions, that would be lovely. Only I'll be able to read them, so they won't be made public. But other than that, I pray you guys have an amazing blessed day. And Chris, this one for you, man. Give me feedback on how you like it.